Shahaji Bazar Power Company Limited generates and supplies electricity in Bangladesh. The company operates natural gas power plants with capacity of 86 megawatt and supplies electricity to Bangladesh PDB Power Development Board. It also produces and supplies petroleum products such as liquid petroleum gas, boiling point solvents, mineral turpentine, diesel, octane, kerosene and fuel gas to Bangladesh Petroleum Corporation. Assalamu alaikum, hello and welcome back to my channel. Today's company Shahaji Bazar Power Company Limited, ticker SPCL, sector fuel and power, utilities industry. Financial modeling and valuation. Let's start fundamental analysis by analyzing income statement. Turnover in the year 2018 was 738 crore BDT. Subsequent years 714, 633 COVID time, 915, 725 and last year 939 crore BDT. Revenue growth rate was 29%. Gross profit was 121 crore. Margin was 13%. Operating profit margin 10%. Company's net income was 28 crore in 2023 last year. EPS was 4.4 in 2018, later 4.4, 4.5, 6.7, 4.4 and last year 1.52. Company share price was 82.9 in 2018, later 85, 72, 73, 75 and 65 last year. Company paid 11% cash dividend last year. Debt equity ratio 0.6 times. Let's forecast. Based on the 3 quarterly statement, company's revenue is estimated to grow about 36%, gross profit margin 15%. And with that, company's estimated EPS is 5.02. Subsequent years, I'm giving revenue growth rates like this. Ultimately, it will hit GDP growth rate minus fake export information, that is 4.9. And with that, company's estimated EPS is 6.26 in 2025, later 6.59, 6.91 and 7.3 in 2028. Income statement of SPCL, Shahaji Bazar Power, and 5-year forecast. Okay. Balance sheet. Total asset was 997 crore BDT in 2018 and last year it was 1263 crore. Current asset 596, non-current 667 crore BDT. Total debt 385 crore. Okay. Net asset value was 36.7. Balance sheet of SPCL. As per my estimation, net asset value will grow to 68 level in 2028. Okay. Cash flow. Cash flows are positive. NOCAPS was 3.23 last year. Check some ratios. Current ratio 1.23 in 2023. Return on asset ROA was 2.2, lowest in last 6 years. ROE 4.1, lowest. ROCE 9.8, lowest in 2023. Company's P ratio was 19 in 2018, later 19.3, 16.1, 10.9, 16.9 and last year 43. But its current EPS is 5. estimated EPS, and with that EPS and current market price, P ratio is 8.2 currently. The same amount of dividend is given. Dividend yield will be 2.7%. Price to book 1.04. Okay, vertical analysis. The company's sales is 100 taka, cost of goods sold 87, cost of sales, gross profit 13, net income 3, top line 100, bottom line 3. Previously it was 10, 12, 13 level, 11 level. I'm estimating it will be 7.3 in 2024 and 8 for the upcoming years. Schedules. CapEx schedule. Depreciation 50 crore. Debt schedule. Working capital schedule. Okay. Let's calculate weighted average cost of capital. Equity 64%, debt 36%. Market caps 840 crore BDT. Free float 41%. Promoters, directors are holding 59%. And I'm taking risk-free rate, that is 1-year T-bill rate, as cost of equity, since market risk premium and expected market return, these are negative. So weighted average cost of capital is calculated as WACC 10.5%. And with that 10.5% WACC and terminal growth rate given 0.5%, one is free cash flow to firm estimates are like this, and that company's intrinsic value is calculated as 90.7, latest price 41.1, telling me I can invest. Sensitivity table given here. Okay. Dividend discount model. CFO method, regression forecasting. This is valuing as 28. Dividend discount model. I'm expecting 20% dividend in 2024 and 40% in 2028, and these are in between dividends. So intrinsic value is 37 based on dividend. Now some relative valuation calculation. EV by sales, implied share price is 72, telling me I can buy. EV by EBITDA, very important measure, implied share price 47.2 within 14.8% upside, telling me I can buy. P ratio, latest annualized EPS 5.03, sector median P is 7 times, so multiplying gives me 34, telling me not to buy. Latest NAV 39.4, sector median price to book is 0.8 times, and implied share price is 32, telling me not to buy. Okay. Forensic accounting checking. Benisham score. Not manipulated, clean green. Piotrowski score. Profitability, leverage, and operating efficiency checking. Average company, Altman Z score, bankruptcy checking, safe zone. No chance of bankruptcy in the near future. Football field. Current price 41.1. shown in the red dotted line, and all the other valuation, DCF estimate, EV by sales, EV by EBITDA, P, PB, TDM, 5-year price range also given here. See for yourself. So this concludes the financial modeling and valuation practice with Shaji Bazar Power Company Limited. Hope we have gathered some insight about the company. Thanks for watching and happy analyzing. Tada!